Hello everyone and welcome back. In this video I want to give you an update on the earnings week and the stocks that I am covering, that I am following, because this is the beginning of earnings season. I love this period. We will learn a lot. This will be an intense month, and here are the companies that will report earnings this week. I think I will record this video, I will upload this video on Monday, so you come prepared. And I want to give you a behind the scenes video, because I'm not talking about a lot of stocks on this YouTube channel. I have some edges, but I am following a lot of stocks that I am not covering. And I want to give you a behind the scenes video to see how to cross read between different companies, different industries. Okay, so we started the earnings season a couple of days ago with banks, and we already learned some important things for the whole banking industry, consumer sentiment, and also credit cards. So I think it will continue for this week. We will learn more things, more information for the consumer sentiment, credit cards, and now more about AI. So yeah, it starts to become really interesting. Okay, I think we can start. In case this is your first video from this channel, welcome. My name is Christophe Noor. I've been investing in the stock market for almost a decade now, and I have achieved a performance of 25% per year by doing the research and only investing in a concentrated portfolio and doing some good stock picking, quality companies. And maybe you don't want to be invested in all these companies, but you have some companies here that you want to follow closely. And I have a couple of favorites. So in this video, I will give you my favorites, what I will do for this week. So Monday, market is closed. Tuesday, you have a few companies. You have some banks, and you have D.H. Horton. The first one, this is a home builder in the US, and one of the biggest home builder we have in the US. Market cap of $40 billion. I've been following D.H. Horton for many years, and I've been following the home building sector in the US for many years. I want to be a shareholder. I think these are very well run businesses. You have D.H. Horton, Toll Brothers, NVR. I think you have an industry that is becoming more asset light. They go from a capital intensive business to an asset light business, and the returns are very good. You are talking about the business that is improving their margins, revenue that is going up, net income going up and to the right. You have no major debt problem, and they use their free cash flow to repurchase their own shares. So a very asset-light business, and they benefited a lot from COVID. All these home builders benefited a lot from COVID. The net income went up immensely, and now you have a reversion to the mean. But the industry is still intact. You have a gap between supply and demand in the US. You have a deficit of homes. You have to build more homes in the US. And right now, the US administration is trying to help. You have propositions such as the 50-year mortgage plan. You have more incentives for people to take more debt, have credit. You have more incentives for home builders to build more homes. It seems like the US government wants to help this industry. So we are talking about good businesses that are already good and that will get a little push from the US administration. Definitely something to monitor. If something is unlocked, if you have a new law that is taking into effect, the whole sector will be lifted. And now the valuation for home builders is not that cheap, is not that expensive. You have a PE ratio of 13 for D.R. Horton. And I will monitor what they say on earnings call. I will monitor what they say during the earnings report. I will monitor their guidance, because I want to see what they plan to do for the next couple of years. I want to see them build more and do more buybacks, actually. By the way, if you want to become a better investor and improve your performance, I have a coaching program. It gives you the exact method I've used to generate 25% per year for almost a decade. More on that at the end of the video. Okay, so this is what I will monitor for Tuesday before open. After this, you have 3M, you have Fastenal, so big companies, capital intensive, and small banks. It will be always helpful to see what some banks are saying about the consumers, about if people consume a lot, about the credit market, and about potentially credit cards. Okay, now you are probably aware that President Trump wants to tackle credit card companies. You have a 10% interest rate cap, and you have swipe fees that will maybe be affected. I want to know from first hand, from banks, what they say. We already learned last week that Jamie Dimon from JP Morgan is not enthusiastic at all about this law. He said that these new laws would maybe cause a recession, hurt the lower class in the US, the middle class in the US. They will prevent people from having credit, people that need credit the most. And it's not good. So some banks are lobbying against changing the industry. We will see. It's a fight. It's a little bit too early to judge whether it will have an impact or not. The fight just began, and we want to monitor with some popcorn what is happening. And this is what I will do for some banks on Tuesday. Also, after the bell, on Tuesday, you have Netflix that is reporting earnings. Netflix, all the eyes will turn to their big acquisition. The stock is in a drawdown of 35%. This is a quality company that is well covered by other YouTubers, so I will not explain what Netflix does on this YouTube channel. You have better people that are doing a better work than me. But yeah, I've been following Netflix since 2018. The business will be fine, and I will not invest in this one. For those who ask, I will not touch Netflix. I don't want to, and I don't like the acquisition. Actually, it's not that I don't like the acquisition. Is that I don't know. There is an execution risk that I don't like. I want to shy away from companies that are making big deals, big acquisitions. So Netflix is making a big acquisition, so I don't want to be invested in Netflix. It's very simple, very stupid, but it works. So I will monitor what they say, just for fun. There is another company I will take more interest in. That's Interactive Brokers. So maybe the best broker for US investors, very secure, and it's a quality company with fat margins. They always give great information about how consumers in the US are feeling. If they are feeling bullish and crazy with a lot of leverage, or if they are feeling desperate, or if everything is normal. Last year, the CEO of Interactive Broker said people were extremely risk on, not risk averse at all. They were taking an extreme amount of debt, leverage with options. So the CEO of Interactive Broker was very cautious. He said, guys, people take just too much risk. People are too bullish. I want to see what he says now. Now that we had a correction in April, now stocks are back up. Same thing for the stock of Interactive Broker. Because of all this momentum, the revenue is skyrocketing. They are debt-free. They will do fine, but the stock is just too high. I know a couple of gurus, legendary investors that are invested in Interactive Brokers right now. I'm not touching the stock, but I want to invest in Interactive Broker actually. Interactive Broker is on my watch list. The PE ratio is 30. Maybe I should have bought in April 2025, but I bought other things that doubled since then. So far it was the good decision to not buy Interactive Broker, but to buy Lam Research. So far so good. I'm touching wood. I will not complain. But yeah, maybe it was a good opportunity to buy Interactive Broker at the time. It's an asset-light business model, a very secure broker, one of the best, market cap of $30 billion, margins extremely high, a lot of stickiness, and it will be stronger and better in 10 years. So definitely a quality business that you want to monitor over time. I will do all the work, earnings report, research, earnings call, etc., etc. Apart from this, you have some small banks, same thing, you want to check the consumer sentiment. After this, on Wednesday, what do I monitor? Almost nothing. Charles Schwab will give us more information. Small banks, Johnson & Johnson, I will not follow this. I will follow CACI. I never know how to pronounce this one. CACI. I'm not sure. I'm always forgetting how to pronounce this one. Anyway, this is a quality stock, a quality company that is in the software department, I would say. Defense, cyber defense, cybercrime, US intelligence, very niche company that is about defense in the US. Some people will like it, some people will hate it. Either way, the stock has been on a run. The margins are fluctuating. It's very hard to understand this business model. The revenue is up and to the right. The net income is up and to the right. The free cash flow is still decently growing, and the company is doing some buybacks with some efficiency. Nothing exemplary, but still a company with a wide moat. So I want to learn more about this business. So I will do more due diligence on this one. Earnings report, earnings call, blah, 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 blah. You know the drill now. And now some banks again and again and again. That's it for Wednesday. Wednesday will be pretty calm, actually. For Tuesday, before open, you have a couple of quality companies that are reporting earnings. Some banks also. GE Aerospace. But I'm not monitoring everything. I'm not monitoring anything, actually, out of this list. What I will monitor on Thursday night is, first of all, Intel. Now you know that all the chip stocks are booming. Intel is now owned by the US government, so maybe they will give the market some public information, some good information about the state of the economy, the demand, etc., etc. I don't like Intel. I will not touch Intel. I don't like it as an investment at all, actually. So I am not interested at all into buying. But if they say something about the market, if they say something about the demand, the whole industry, I will read. And I will monitor the situation, but I will not touch the stock. I think it's a speculative play. You can buy because the US government is buying. Fair enough. They want to completely change their business model. I don't like it at all. I don't think they have a great moat. I think the business model will just deteriorate, and I don't like the management team at all. I don't think Intel fits my investment criteria of only investing in quality companies with a wide moat, revenue up and to the right, net income up and to the right, free cash flow machine, a buyback machine. No. Intel is not like this at all. It's a value play, it's a turnaround play, it's a speculative play. I don't want to invest in this way. Some people will love it and will make a lot of money. Congratulations to you if you're in this situation. The other company that is reporting earnings on Thursday night is Intuitive Surgical. This one is a quality play. This one is a quality play. Basically, they sell robots for surgery. This is a simplification, but this is true. Intuitive develops, produces, and markets a robotic system for assisting minimally invasive surgery. Yeah, robots for surgery. It's an AI play, but also a qualitative play. Their margins are immense. The moat is immense. The value they create to the world is immense. Margins are sky high. Revenue is up and to the right, as you can see here in blue. Revenue up and to the right for the past decade. Net income up and to the right. They don't have any debt. They are net cash. The free cash flow is up and to the right. The efficiency is very good. They have a ROIC of 20% per year. They don't do much buybacks. They have a high SBC. But fair enough, we are talking about a company that will rule over the world, and they have no clear competition. So almost a monopolistic position. Something that is growing. Where do you think the industry will be in the next 5 years, 10 years? Do you think we will use more robots for surgery or fewer robots for surgery? My strong guess is more robots. With the help of AI, difficult surgery will need more robots. You will detect more things. You will be more efficient. You will be safer. You will always need humans to monitor things. But I think we are in front of a very promising business model. Quality, growing industry, wide mode, very good capital allocation decisions, very good management team. But right now, the stock is up and the valuation is expensive. PE ratio of 70, forward PE ratio of 50. I am not touching the stock at these prices, but I want to see how they will implement AI everywhere. So I will do the report, I will do some good research, read the earnings report, read the transcript, everything. I don't think I will make a video on this one because the valuation is just too crazy high, crazy expensive. But this is definitely something I have on my watch list and I will want to buy it in the future when the valuation becomes normal again. Is it for Thursday? I have another company that is here. You have Capital One Financial Corp. As always, we are talking about the big banking industry. I want to know more about credit cards for this company. They issue a lot of cards, so most likely they will get a question from an analyst on Wall Street about credit cards and how the new laws will impact their business model of issuing cards. And maybe they will give us more substance, maybe some more information. That's it. That's the only thing I want to monitor. I don't want to invest in Capital One Financial, but I want to see what the management team says publicly. Apart from this, I am not interested in investing in banks. I love to monitor the industry, but I'm not a happy buyer. And the last company I want to monitor is reporting earnings on Friday. This is Booz Allen Hamilton, something I have never talked about on my YouTube channel. I don't plan to invest in a stock, but it's a company that is related to the cybersecurity and AI. So if they have some things to say about the AI trends, how AI will impact cybersecurity, I will read everything. I will monitor everything. It's a pretty good company after all. Look at the revenue up and to the right, net income up and to the right, manageable debt, efficiency, free cash flow, buybacks. It's a pretty good company. PE ratio of 15. Pretty good company. I am not invested in the stock because I just find better opportunities for my style. But yeah, pretty good. If this is interesting to you, you can start some research on this company. I am invested in Fortinet and I'm doing a deep research on cybersecurity at the moment. So all the companies that are touching this cybersecurity industry, I am interested. By the way, there is a great podcast from The Compound with the CEO of CrowdStrike. So I can give you the link so you don't have to do the research. The Compound CrowdStrike interview that was released a couple of days ago. Just type this on the internet, go to their YouTube channel, The Compound. It should be a video that was released, I don't know, 5 days ago, 6 days ago. So you will find it. And Josh Brown is interviewing the CEO of CrowdStrike and how AI will impact the cybersecurity industry. The TLDR is everything will accelerate. We need cybersecurity more than ever. So all the cybersecurity stocks have a great future in front of them. All the companies will grow their total addressable market. And the next leg of innovation is identity. And if you don't know what I'm talking about, please watch the video. Give a like, subscribe to their YouTube channel. Great work. So these were all the companies I'm monitoring for this earnings week. If you like this content and you want to go deeper, I have a coaching program. In this program, you will learn the strategy I use to outperform the market. You will learn how to find winning opportunities. You will learn how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, inside the program, you will have access to an exclusive community of like-minded investors, and you will also have access to my personalized guidance to reach your investing goals. Click the first link in the description to get more information. You will get a short video that explains how everything works, completely for free. No need for your email address, just click the first link in the description and I'll see you on the other side.